Welcome back to the channel. So in today's video, we're going to be putting on a live trade with a stock by the name of Royal Caribbean Cruises. You guys might have heard about it, ticker RCL. I believe that we might be on the cusp of a pretty big breakthrough here. I want us to put together a little bit of a clever option play to try to take advantage of it by having an asymmetrical bet going on. Now, I am a little bit under the weather, so if I sound a little bit nasal, forgive me for that. But let's go straight over to my screen here and just take a look at what I'm seeing with RCL here. If you've been paying attention, you would know that RCL, let me just adjust some of these days here. We're going to back it up a little bit more. RCL right now is at this resistance that it's essentially faced since 2018. So it's been a long time coming. You know, we've had this this drop here since from COVID, right? From 135 all the way down to 1925, all the way down here. We've come all the way back up again, right? So the question is, what's going to happen this time about? Currently, we're kind of grinding away out there. This is the weekly candle here. We're sitting right up top. We've been up how many weeks now? Quite a few weeks. And on the daily candle, this is what we're seeing here, right? So there's this large green candle. That's from the FOMC day on Wednesday. JPOW speaking and all, so we had that big boost. And we've kind of just been chilling up here since then. So that's how that looks like. Now, I also want us to briefly look at their financials here. So the reason I bring that up is we want to have some sort of thesis to go along with the reason as to why maybe we should grind into all-time highs, right? So if we do look at the fact that in the trailing 12 months, RCL has had, revenues that have finally overtaken the revenues pre-COVID. It's been a long time coming, but it finally has. But EPS-wise, earnings per share, we have yet to overcome what we had. And primarily that is because, we can see right now in 2023, we had 631 for EPS compared to 895 back in, what does that put us back? 2019. Even though our operating income is also higher, right? Well, that's because there's more shares outstanding, right? So RCL we had about the same amount of shares outstanding. For a long time, they were even buying back shares, and then COVID came about, and they ended up raising a lot of money to help them get over that hump. So that's why the EPS is not there, right? We can kind of see here, if we look at the chart here for 2023, we had a 6.77 EPS, which does fall short of 2019. So EPS-wise, not that great. But if we look forward just a little bit here in 2024, they are guiding for 996, which is higher than what 2019 was, EPS-wise. So that's great. Great growth, 47%. They recently raised their guidance up to this 996 level. I think they were expecting like maybe a midpoint of like 98 or so when they gave guidance during their earnings, but they came out and guided a little bit higher. So that's all great to see. We could also see that over the 12-month, 3-month, 1-month mark, the stock has been outperforming the majority of stocks in the U.S. market. In the last month, 78% of stocks it has outperformed on. So this is all great stuff to see, right? So we do have a decent thesis as to why we should see a breakout here. The stock's been loved by Wall Street for the past 12 months, 6 months. There's good growth coming in 2024. They've overtaken their operating income compared to the COVID. Our EPS should finally surpass that as well. So a lot of positive things forward, right? So the question is, will now be the time when we have enough momentum to actually push it over? Right now, as we look at it, let me see, where do we want to look at it? Let's look here, and we'll bring up Dow on the left here. So we have Dow Jones. Okay, this is the future. So let me remember, how do I do this, okay? So this is Dow Index, right? So we could see how we're trading down on the day here, right? Where is it? The open was somewhere here. We're trading down on the day. RCL though, we look over here, it's down about 9 cents on the day, 0.07. Okay, so there is weakness there. Don't get me wrong, there is weakness, but very little weakness. And sorry, again, sneeze is coming. That's good to see because there's every reason out there to go out and start trying to short it and dumping the stock. I mean, again, it's sitting at this resistance that it's been facing for like 7-8 years, right? If you look at the option market here, we'll go to the trade here. So for today, we can see, we could usually judge by looking at what traded at ask, because typically if you're putting in a market order and you're buy to open, it's usually at the ask. 237 puts have been bought as a market order compared to 132 calls have been bought. So it's not quite 2-to-1 ratio, but it's getting there. So there's definitely a lot more of a bearish undertone up here, which is to be expected. Again, the easier trade here is, hey, short at this resistance, right? Why not? I would agree with that if there was more downside today, especially with the Dow being down. I think all the indices are down for the day here. If we just bring this up here, we can see the futures market. I mean, the Russell is down 109, you know, NASDAQ is actually flat. And sure, ES is kind of flat too. But still, you could expect more downside if this was really the top, in my opinion. Now, all that is okay because we're going to put together an option play. I've kind of already priced it out a little bit. I'm going to tell you guys why I'm thinking the way I am right here. So I'm thinking about putting on a vertical spread. We're going to be long the 135 leg, short the 145 leg. Okay, expiration on this, as you can see, is May 17 of this year, obviously. So it gives us about 2 months on this play. So our long leg is right at the money at 135. If we check in again, we could see that RCL is actually trading at 135 already. Right now, short leg is at 145. Okay. So the reason why I'm putting it together like this, well, for starters, I mean, if we look at, so our absolute risk here, if we pay attention to the figures over here, as I hover over, our absolute risk is about 8,400 on this trade. Absolute gain is about 11,618, right? That's that expiration date, by the way. The purple line represents today. You know, if price went to that level today, what would the P&L look like? The light blue represents how that P&L would look like come expiration. So it's about 8,400 to 11,600 right now. We're not going to be risking all of it. Just keep that in mind, okay? There's no reason for our options to expire worthless, right? We're never going to let it get to that. The way I'm looking at it here, I'll bring it up here, is, oh, by the way, we could still see that the Dow is actually selling off while Royal Caribbean is kind of holding steady here at being flat. What was I going to say here, okay? So this is the FOMC day, right, where we busted open. Okay, in my opinion, if we were to lose this level here, okay, I'm just going to put this right here, about 133, right? If we start crossing under 133, that is when I would probably exit this position. Yes, it's a tight stop, but I'm okay with that because very often of these resistances, you've seen this all the time, when it starts to curl over, it will curl over and it will go quick, right? Who knows how deep that pullback can end up being, right? Right, we may lose that level and come all the way down to 127, right? It'll be great if we bounce there, right? But what if it continues to go, right? What if the indices start really selling off and it continues to go? We don't know, right? Or maybe it does bounce here and go higher. We hope that happens, right? But so I'm keeping that in mind that, hey, I'm looking at this high over here, and I expect us to be able to hold that high, that if the structure is good, if things are bullish, we should be able to hold that high, okay? So I'm pricing in my risk based on that high, right, at 133. So if we go over to 133, what would that risk look like today, right? So pay attention to this little number that's appearing as I'm moving around, right? You see how it says like 845 right now? Okay. So what does that tell me? It tells me if I get into this trade right now and price dumps to, let's say it dumps exactly to 133, I would be down about $1,011, okay? Approximately. It's never going to be exact because of all the Greeks involved in options. Likely if price were to drop that quickly, volatility would shoot up. And since this trade is long Vega, which we could see right here, I would actually benefit from that. So I wouldn't be down as much, right? We are long, net long on these options, so we are long volatility. So volatility would shoot up, would be less down in it. But that's too complicated to get into it right now. The point being, 133, you know, I'd be down 1,000. So the question for me is, okay, portfolio-wise, risk-wise, what does $1,000 represent out of my portfolio? In general, my recommendation, so obviously everyone trades differently. These type of ideas, you should only be risking, let's say, at most 2-3% of your portfolio. You know, in my case, if I were to risk what 1,000 represents way less than even 1% of my portfolio, which is good because you have to be comfortable being able to take a loss. If the position is way too big and push comes to shove and you gotta get out and you didn't size accordingly, you're gonna be like, oh, it's too much of a hit for me to take. Let me wait for a bounce back, and it never comes. And instead of taking this loss here at, let's say, if you were in my position, instead of taking this loss at 1,000, what did we say? At 1,000, you know, 2 months later, you're taking this loss at, you know, 8,400, right? So keep the losses minimum so you could easily take those losses when they come. And here's the thing, if we're risking 1,000 on this trade, right, because we plan to manage it properly, we do have an upside of as high as $11,578, right? Yes, we do have to wait till expiration to really realize that sum of money, because if price were to move there today, right, this is the downside of having a vertical spread on, then let's say the price moved to 145 today somehow, we would be up 3,700 on the trade. I mean, not bad at all, right? But it's a far cry from 11,578. Again, pay attention to that blue number, the light blue number here, right? And that's because obviously we sold a call also, and it's also going up in value. And both of our options have a lot of extrinsic value that has to decay as we approach expiration date. But I do like vertical spreads for the fact that it allows us to minimize the what if we're wrong aspect of the trade. Because, I mean, let's look. What is our absolute loss here? 8,400. So I have another option here. So let's do this. So as an example, right, this is a single call leg, right? We're going to size this up to about a similar amount of absolute loss, let's say. You'll understand what I'm doing in a split second here. I'm just trying to get this to as close to 8,400. Okay, this is 89. Okay, we'll get it as close like this. So, okay, so let's say we did not want to do a spread. We just wanted to buy straight up call. Okay, 135 leg, so we're keeping it at the money here. Keeping it at the money here. Absolute risk is the same. Okay. What would happen if the stock were to drop to 133 as we just priced it out a second ago, right? 133, let's just do this for a second. Oops, let me unleash that. Okay, 133, what would happen? We would actually be down almost $1,700, okay? Instead of being down 1,000, we would be down $1,700. 70% more of a loss we would have to be taking, okay? Now, what about on the upside, right? Now, if the stock were to move, let's say, I mean, what was our absolute gain here? 11,600, right? So if you look here, 11,600. So it would require a move to about 149. Actually, let's look at come expiration. I'm paying attention to the blue number there, 11,000. Okay, so 11,600 is about there. So 153 come expiration for this single call leg it would take to make as much on that spread come expiration, right? 153 versus us just getting to 145, right? So 145 versus 153. Now, granted, this is where the single call obviously shines. The fact is, if the move comes earlier, you benefit more, right? That's why the immediate line, today's line, is above the expiration line, right? Notice that for the spread, it's the opposite, right? The expiration line is above the today line, right? So if I change, just watch this. If I change today's date and I go forward into the future, notice how it begins to creep closer and closer to the expiration line, right? The curvature of the lines, you see, they start to look more and more as that expiration line, okay? And the relationship that happens with the single leg is as we go forward, same thing, that today leg is actually converging, right? But from the other side of it. So the structure is very, very different, right? The structure is different. And sure, if the move is immediate, you know, as we saw, 11,000, if 11,000 happens today, for us to hit 11,000 today, it would take a move to 150 today, right? A move to 150 today would give us what? You know, five grand, right? So it's structured very, very differently. Keep that in mind. But our risk is so much higher immediately when we're trying to manage it, right? And again, there's no guarantee that the stock is going to move that quickly. But we will have to hold the spread for longer. That is for sure the downside here. We do have to hold it for longer if the move, if we do get this move to 150, 160 over the next couple of weeks. We would be incentivized to hold it, to try to squeeze more money out of it, because every single day that passes by at that point, we don't need the stock to move anymore. We just need the time decay to be kicking in. But let's get this trade loaded in, right? So we have here we can see it here, May 17, 135, 145, right? Which matches up what we put here, 135, 145. Let's, you can see what the prices are going for. 17. Submit that through. Okay, so we got filled at 417. A little better than mid price. Granted, RCL just fell. I just noticed that. So maybe the mid is a little lower. It's still about the same. Anyhow, it doesn't matter. Obviously, we're just penny pinching for the sake of penny pinching. Let's look at it. So there's our trade, right? So we're down already out of the gate. Maybe no surprise. You can see how it widened up right off the bat, and yeah. But okay, I mean, from this point on, we manage it, right? What I prefer to do here, I mean, we did pay 418 for it, so we don't have to even visualize anything else. I mean, it will look exactly like this, right? Because if the price was different, I would be able to like write in the price here. Let's say we paid 20 for it, 420. We'll put 420, lock it in there, kind of play around and see what kind of loss I'd be taking. But we did pay 418, so I could kind of lock it like that, and we will monitor it from here and see what's going to happen. As I said, I think a move down to 133 would just simply kick us out of this trade here, right? But if it doesn't, and we actually get this push through, I mean, there's a 10x on the table for us to be taking here. Keep that in mind. There's a 10x on the table for us to be taking here, right? If it pushes up from here on out, gets to 145, chills out there, come towards expiration, I mean, that's 10x our risk, if not more. Because if we're looking to take it off the table at about 1,000 off, I mean, we're risking 1,000 to make 11.6, right? That's a really nice risk and reward. Now, there's also a good chance that if price were to move all the way up here, then maybe 3-4 weeks from now, I mean, just to show you guys how this would look like. Say we fast forward April 25th, right? Say it's April 25th, price moved up to, I mean, even then, that's just a funny thing. So even then, right, if April 25th comes about and price is at 145, we'd be up $5,000 on the trade, which is still 5x our risk, not our absolute risk, but just the risk that we set aside for this trade. It just takes just longer, right? We do have to wait till May to really realize it, unless, cruise lines just keeps on running like crazy, Again, that's the downside of this play, but that's okay. We'll be patient. We will be patient here. Hopefully, I mean, listen, it would be nice to see cruise lines finish up on the day. Not gonna lie, it's just kind of not doing much. Apparently, we're up right now. That's only because the ask pulled away so much more. It used to be at 430, so the mid price is a little bit higher. But none of that really matters so much here. It's gonna be obviously just dangling on and about. But I would kind of argue that if we were to maybe see a recovery in the indices, that it could very much finish in the green today. I mean, we'll have to see, right? We'll have to see. It'll be an interesting play. But anyhow, if you enjoyed this video, if you found it beneficial, educational in any way possible, subscribe, throw me a like. This is a brand new channel. I'm trying to figure out how to run it. What sort of content you guys will find interesting to watch. Hopefully this was interesting, and maybe you'll put on the same exact trade. I mean, not financial advice, obviously, but I just showed you how we put it on, and hopefully it works out for us. I'll keep you guys updated. Have a great day.